Hello, hello. How's everyone doing today? Welcome back to Sin City Crypto Live. My name is David. I'll be one of your co-hosts. And today, like every single day, I'm coming at you live in our studio in Las Vegas, Nevada. Today is a very special day for me. It's Bring Your Child to Work Day. So you notice a little guy on the couch? That's my little guy. My son, Liam, he wanted to come to work with me today. Liam, wave to the camera. There you go. He's our little blockchain coder there we got there. Anyways, guys, we're excited to be here today. If you're new here, say hello. We'd love to personally welcome you. Also, we're talking about some big stuff today. Huge Polygon news, huge Cronos news. We have another HR video from Gary the Gun Gensler. We're talking Web3. We're talking Metaverse. XRP went down to $0. People got wrecked. What does that mean? Also, we're going to talk about yesterday's Bitcoin volatility. Of course, we have Forrest joining us. So with that being said, let's bring him in. Forrest, day 3, bro. I can get used to this, man.
Yeah, it's nice. I'm enjoying it. It's been a pleasure.
Me too. Me you and Rocco will talk after this. All jokes aside, man. Thank you so much again. How are you doing today?
I'm doing well. Can't complain too much. The market's rebounding nicely. So, look, anytime the market, anytime the market holds on after a little crash like that, a little FUD, that's a good thing. It's a show of strength. So, can't complain.
Amen to that. And we'll uncover exactly what happened yesterday. So, I've been catching a lot of heat. About this club thing, and Jimmy thinks I rugged him. Jimmy, today's club limit for you, bro, I'm bringing it down from 300 to 220. Okay? 220 is the club limit.
320?
220.
220.
Forrest, if we open up the club, we're going to have to see your dance moves. I don't have dance moves either.
All right, 220.
I just shake my head like a weirdo, but it is what it is.
We do it for
the community. What do you say? Hopefully the stream crashes.
No, I didn't say that.
Oh, okay, I thought that's what I said. That would have been funny. That's probably what I would have said. All right, let's start. Let's start with some giggles. Yeah. Well, this is kind of informative, kind of not funny, but kind of funny because it's Gary Gensler. We've been accustomed to Gary Gensler's amazing HR videos and how much money he pays his video editor. Well, he just came out with a new one, and it's about crypto. So without further ado, let's take a look at what our fearless leader at the Securities and Exchange Commission has to say about cryptocurrencies.
What do the securities laws have to do with goldfish?
What?
Many places around the country, we're required to use a leash when you walk your dog. But let's just say you get stopped because you're walking Rover unleashed. What do you think would happen if you told the police officer that Rover is actually a goldfish? You'd still get a citation, and that's because the law cares about...
All right, okay. This is the first time I've not pre-watched this video. I don't have any commentary prepared. But if this guy is gonna go down the route of where I think he's gonna go, oh my God. All right.
What something actually is, not what you call it. Well, the same thing is true in the securities markets. As Justice Thurgood Marshall put it so well, Congress's purpose in enacting the securities laws was to regulate investments in whatever form they are made and by whatever name they are called. That's why Congress's definition of securities includes more than 30 items, such as stocks, bonds, notes, and something called investment contracts. An investment contract exists when you invest money in a common enterprise with a reasonable expectation of profits to be derived from the efforts of others. Intermediaries for investment contracts, whether they're exchanges, brokers, dealers, clearinghouses, they need to comply with the securities laws and register with the Securities and Exchange Commission. Instead, many crypto platforms are just pretending that these investment contracts that they offer are more like goldfish. And the lack of compliance by these crypto platforms means that you don't have basic investor protections. These are things like rule books and surveillance to prevent fraud manipulation, or appropriate custody and, yes, segregation of customer assets so they don't get misused or abused, or simply become the property of the platform, especially if it goes into bankruptcy. And you lack basic protections as customers that you aren't just trading against the house. Further, many of these crypto platforms combine the activities of an exchange, broker-dealer, and clearinghouse under the same roof. And when a platform doesn't register these functions, that puts investors like you at risk. When a platform combines these functions, that creates conflicts of interest that undermine our time-tested investor protections. Crypto markets suffer from a lack of regulatory compliance. It's not a lack of regulatory clarity. As we alleged in a recent action, one crypto platform executive knew the law so well that he actually advised issuers to scrub specific language from their web pages in an effort to pretend that their tokens weren't investment contracts. You could say, in other words, they tried to say that their dogs were goldfish. It doesn't matter if you call yourself onshore or offshore. If you make securities available to American investors, you must comply with American laws. The law is clear. If you're a securities exchange, clearinghouse, broker, or dealer, you must come into compliance, register with us, and deal with conflicts of interest and disclose important information. For 90 years, these laws have helped protect investors like you. You might say, they're an investor's best friend.
Yeah, you're my bestest friend. You know what's funny? Man, if so much to say about him, talking about, yeah, boo, exactly. Talking about just because you think it's something else doesn't mean it's not. Anyways, we're not going to go down that conversation rabbit hole. But it's funny to me. You know what's funny is I don't think anyone in here will disagree that exchanges commingling customer funds with their money is bad. Exchanges doing what else they're doing, trading against their customers, that's bad because they know everyone's liquidation points. No one says that no, we don't want any. We do want regulation on those centralized entities. What we don't want is for you to sit here and say, Aave needs to come in and like DeFi does not need that kind of regulation. It's done peer-to-peer and it's regulated by code. So what are your thoughts on Gary's video there?
Yeah, I mean, the goldfish analogy was super lame, to be quite honest, but whatever, it gets the point across. There was like a 2-minute stretch in the middle of the video where I totally agree. Like the entire world agrees, like the two things you just said: don't commingle funds, don't trade against the house, or the exchange shouldn't be able to trade its own book or whatever. Totally agree with that. It's like that part of the video was great. And then he's like, it's not a lack of clarity. It's a lack of regulation. It absolutely is a lack of regulatory clarity. Like he's asking these institutions to come in and register with them, and then they're turning around and trying to sue them. It's like, how many times have they met with Coinbase? How many times did they meet with FTX? Right? Those FTX meetings clearly did not help one bit. It's just, yeah. Now we could probably, not go down this path because we could just sit and bash Gary Gensler all day long. Unfortunately.
Let me ask you a question, Forrest. Have you ever bought a crypto token just because you needed it to use for gas fees to either mint an NFT, use it on DeFi? I know I have.
Yeah, absolutely.
Remember one time I was trying to mint a Solana NFT? And I only bought the Solana because I needed to use it for the gas. I didn't buy it to hold it. I didn't buy it to try to make money. And that's where the issue arises, is the SEC wants to put everything into a box. And it doesn't work. Someone in the chat said, yeah, as time tested as horse and buggies. Exactly my point. Exactly the point everyone in our space is making. You can't take something that worked 100 years ago with all the advancements we'd had in technology and the internet and everything, and try to squeeze what we have today in crypto and DeFi into one little box. I think what crypto and DeFi and the entire blockchain space can do deserves a little bit of time, a little bit of effort, a little more resource to be able to create a regulatory environment for this to thrive. It's going to benefit everyone. But they don't seem to understand that. All they want to do is they want power, and that is their problem. Is everyone wants power. So that's my little rant on that. What do you guys think? Do you guys think they should, they should do a brand new legislative thing? I know we talked about this, Forrest. In the U.S., it takes forever, right? Democracy, we're a republic. We vote on everything. It takes 50,000 freaking hours for this person to come together. They finally pass something. It's going to go to the Senate, and the Senate sends it back, and then it's a nightmare. And so with how divided our government is today, I don't know. Do we have faith that we'll get some sort of regulation? Who knows? But maybe we need someone at the helm who pushes that forward and brings everyone together, because I'm sure if the SEC and CFTC decided to maybe get together, put their heads together and be like, okay, this falls under this falls under this. Hey, Congress, this is how we should regulate it. Instead of fighting back and forth, you got CFTC launching lawsuits to try to get ahead of the SEC. The SEC does the same thing. If our own regulators can't come to agreement in what is security and what's not, how do you expect exchanges to? How do you expect these projects to? It's complete BS. All right. Now, let's move on. This is kind of funny. And this kind of worries me with AI, man. So I'm going to show this real quick. So Jerome Powell, he was pranked. So we saw this with Christine Lagarde. What is up with these central bankers? These chairs getting prank calls? So thought he was on a phone call with President Zelensky from Ukraine, but it was actually a prank. And he divulged some info in there. Apparently, this was back in January or February. They were expecting 2 more 25 basis point rate hikes. Jerome Powell, in the video, in the call, said that the market's already priced it in, and he essentially confirmed that that's what's going to happen. So, and he also talked about they're going to keep it there for a while until inflation comes down to 2%, blah, 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 blah. It's just funny to me that you have I can argue the most important man in the world when it comes to money and finance, Jerome Powell, getting pranked by pranksters. And then we have this. This is pretty funny. Speaking of banks, banks right now need money to make loans to people who need money. We've seen First Republic Bank go through this. A lot of banks are accessing the Fed discount window to get liquidity to loan money out to people who don't have money. It's just a funny conundrum. Speaking of banks, Forrest, I want to share this. And, you gave me the okay for you to talk about it. This is definitely personal. You tweeted this. How do you pronounce that, by the way? Truist or Trust?
Truist.
Truist. Oh, they're not the truest, because they closed your business bank account because your LLC name has crypto in it. You mind talking to us about this and kind of what effect it has had on you, your business, and anything else you want to share with us?
Yeah, so I went in today to pay my taxes. Today I had some sort of extension window. I know the tax deadline was a while ago, or I think it was last week or something, or a week or two ago. I went in to pay my taxes today. It's the last day I had to be able to do it. Been working with my CPA to get it done, which the last thing I need to do is just send the wire for my payroll taxes to the IRS. So I go into the bank to do that, and all the while I'm just I've sent transactions bigger than this on chain. It's just how easy would this be to just go into my MetaMask wallet and put in the IRS's Ethereum address and boom, send that money, instead of having to go drive into the bank to send a wire. And I know you can send wires online and stuff, but sometimes it's required to go into a bank in some situations for certain amounts and whatnot. So I had to go into the bank. I get in there and I give him my ID. He's pulling up my account and he's like, "Oh, we closed your bank account." And I was like, "Why?" "Well, it looks like they flagged it because it had crypto. It's associated with crypto. It has crypto in the name." I was like, I don't buy or sell cryptocurrencies. Hold on.
It wasn't because of any transactions made to or from a crypto exchange, or just because it had the name crypto in it?
That's crazy.
Oh no, yeah. The crazy part is I have 0 transactions in that account. That was a brand new account that was set up December 31st of last year, right? Or it was the last week of 2022 to make sure I had the business account to pay the taxes in. I deposited the amount of my tax liability. It's just been sitting in there. The only thing I've done out of that account. There's 2 transactions. Both of those transactions were payments to my CPA. Those are the only transactions. And the rest of the money, which has been sitting aside, right, in that business account for the last 4 months, they just took it out and they said, oh, yeah, we're sending you a check. And the check will be here, and it could be 5 to 10 days, 5 to 10 business days. It's like, you got to be kidding me. So now I can't pay my taxes today. I'm going to have to get that check, deposit it in some other bank account.
And it's going to take another 5 to 10 days to clear that check to get deposited into your account.
Yeah, potentially. Yeah. I mean, it's and then so meanwhile, I'm racking up penalties with the IRS, and I'm going to have to go and submit requests to have those penalties waived because of a weird situation like this. And I'll probably get the penalties waived. I probably won't have to pay those penalties. It's just like, it's so inefficient. It's just a clown show. And it's because Truist decides that they don't want to service people that have crypto in their business name. That's
crazy.
Ridiculous.
The bank name, Jimmy, is Truist.
Truist used to be BB&T, by the way. That BB&T rebranded to Truist, for those who may have never heard of Truist before.
Guys,
it's a big name.
Be very, very careful, okay? And I'll tell you what I did. So I have my main bank account with Bank of America. That's where all my bills come out of. That's where I have a little bit of my savings, right, to be able to access if something pops up or whatever. Nothing crypto related comes in or goes into or comes out of that account. Nothing. I have a separate account at a credit union where I don't keep any savings. I don't keep any money. It's just a checking account. And that is where I on and off ramp my fiat to and from Coinbase and other exchanges. And it's like, if I send money to Coinbase, there's no money left in there. If money comes from Coinbase, I pull it out immediately, and I don't do it in massive chunks. Because I always think worst case scenario, if they're willing to shut down this man's business account, which I'm sure it wasn't just a couple $100, and we don't need to know how much money was in there, but I'm sure it was a decent amount of money at the time where people like banks are bleeding deposits, and you decide, nope, we don't want it just because the name crypto is in his LLC. Not even any transaction. So for me, better safe than sorry. As soon as I get money in there, I pull the money out. So the point I'm trying to make is, separate your bank account that you use for your everyday bills and what you need to continue on, whether it's work or pay bills, whatever the case may be, direct deposits from your work, and then have a completely separate account that if it gets closed, whatever. You're not going to have to go around and change this information here or open up a new bank. You just move on to the next one. So just be vigilant, be careful, and don't get stuck. Although, yeah, Forrest did get his money back, but look at the inconvenience he has to go through. Wait 10 days. Well, what if he had a mortgage to pay? You just don't know the situation people are in. So it's just something to keep an eye on, guys. All right. Forrest, thanks for sharing that, by the way. We appreciate that. I think it's important for people to get and hear actual stories. One of our friends, I'm not going to throw their name out there, but a massive bank, Chase, did the same thing. Close to $500,000. They just closed the account. I was like, yeah, we closed your account because of crypto. So just be careful, guys. Just be careful. All right, let's move on to some crypto prices. So I got CoinMarketCap pulled up here. We're looking at $1.2 trillion in crypto market cap. Volume is up to 65 billion. This was up from 52 billion yesterday. Bitcoin dominance has officially crossed or is in the 47th percentile now, or 47%. And ETH dominance has come down from 19.5 to 19%. Is money bleeding from ETH into Bitcoin? I think everything, and I'm sure if Forrest wants, if he wants to show Bitcoin, the alt market cap versus Bitcoin, and if money is bleeding from alts to Bitcoin, we could take a look at that. But either way, Bitcoin is sitting at $29,300, up 3% over the last week, up 1% over the last hour. Now, we had a massive bout of volatility, massive amounts of liquidation yesterday, and everyone was like, well, what happened? And then we had rumors fly. So let's kind of go to the timeline of what happened here. First, we had this. This was tweeted from Tier 10K. It says usually a very, not active, but what's the word I'm looking for, Rocco? Very, like,
reputable.
trustful. Very trustful, alerts. Said Mt. Gox and U.S. government wallets are making transactions, and they cited Arkham Alert. Okay. To which we have this article. Arkham denies buggy Mt. Gox alert to blame for the 7% Bitcoin crash. Now, here's what happened. Arkham initially tweeted to confirm the mistake had occurred as a result of a bug fix, which sent out a false alert on their analytics platform to a small subset of users, one of those being Tier 10K. So, of course, everyone started panicking, but an hour later, they published a follow-up tweet, Arkham did, claiming that it had conducted an investigation of this alert situation and determined that the Arkham alerts were sent accurately in this case. So a lot of people are saying they did this on purpose to manipulate the market. We had massive amounts. We had $300 million of liquidations happen in the last 24 hours. With, of course, Bitcoin leading the way at 144 million, followed by Ethereum at 62 million. It's kind of interesting to see ARB up here again. The last time we checked, massive liquidations. It was over a $250 million, so 250 million. Arbitrum was in the top 5. So we know a lot of people are speculating on Arbitrum. So that's just kind of interesting, something I noted. But as far as the liquidations, what they were, you had 71% of those liquidations were longs, which means about 28% were shorts. Price wicked all the way down to 27.5 or 27.6 in a massive 1 hour candle, and then rebounded almost not immediately, but just a couple hours later, back up to 28,200. And I think the biggest thing was people worried about the U.S. government dumping some of their Bitcoin. And here's a great reason why. This is tweeted from Will Clemente. Between assets seized from Bitfinex and Silk Road, U.S. government currently holds 205,000 Bitcoin, which is around $6 billion. So I think the only entity that holds more Bitcoin is GBTC, Grayscale Bitcoin Trust, I believe. And then it's the U.S. government. And so anytime you hear, the government's dumping, everyone starts panicking, people start selling, you start hitting these liquidation points, it starts cascading. What are your thoughts on this whole situation? Do you think it was done on purpose to kind of, whether it was from an exchange or whether it was Arkham or whatever the case may be? Is there another answer? Because people are saying, okay, Arkham came out and said there's no way the tweet or the alert is what brought it down. Do you agree or disagree?
Yeah, I'm in the camp that this is probably related to some sort of manipulation. There's just absurd amounts of money to be made by being able to control the Bitcoin price and move it by 5 to 7% in a short period of time. Imagine how much money you could make as an individual trader if you knew that you could influence the price of Bitcoin to go down 7%. You'd go, 50x short and rack up a huge win. Meanwhile, there's, very large traders with very large public positions on chain, or you've got exchanges that know their liquidation points because they've got the data. And there's huge amounts of money to be made if you can liquidate these whales or these traders, especially with something that's like out of the blue that they're not expecting. They're trading the charts, they're trading the trends, then all of a sudden some major news drops. So would not surprise me. I believe the Arkham alerts, actually they said too, which I don't know if was included in that article, Arkham came out and said that the price actually started crashing before their alerts went out, which is really interesting because it's almost as if somebody started piling in on shorts or somebody started dumping before like they knew, minutes beforehand. So probably it's like the show Billions. You've got really rich people, that have inside information that are making big moves, and we're just here absorbing and observing the volatility.
Someone from our community posted, because I did a video on this yesterday. Someone in our community posted, does this make crypto a bad investment if something like that or this just manipulation happens? What do you say to someone who says that? Someone who might not be, and I'm not saying this person is not 100% bought into crypto, but just your average Joe. They're again ready to invest. Like, what the hell just happened? And you try to explain this to them, and you're like, well, is crypto a good investment if this stuff is going on? What would you say to those people?
Yeah, I'd say it's every single investment out there is subject to this kind of manipulation and risk. I mean, obviously, look, United States government not necessarily being pro-crypto and them owning just a ton of Bitcoin, that's a significant risk. And I'm not saying that as something, as a criticism of Bitcoin, because if they start unloading Bitcoin, it's going to affect the entire market. It's going to affect altcoins. It's going to affect Ethereum. We saw just what the short-term effects of that thought, that news yesterday was. So yeah, it's certainly a risk. I mean, they could come in and just, crush the market and hold the market down for probably, a year or two if they just continued to sell Bitcoin every single day until $6 billion. That can really suppress the price over time. So yeah, I mean, it is a significant risk, but you have to understand that those risks are present in, I'd argue, every single market. You saw JP Morgan was spoofing the silver market for years, suppressing and manipulating the price. And that's a way, way, way larger market. So they can do it to the silver market, and they're going to do it to any market. So yeah, it's just one of those things that it pays to be extremely diligent and stay on top of things and look for investments that are just maybe out. And again, it depends on your risk profile, but do you want to be all in on just Bitcoin or all in on just ETH or just all in on only Bitcoin and ETH? No, you probably want to be doing some due diligence and finding these other opportunities that have even a little bit more upside, and you take those profits and you don't depend on just one investment or two investments to perform well for you, because there are those large risks.
I 100% agree. And here's the thing, I say it all the time and I'll say it again. When something like that happens, if you're a true believer in crypto and nothing on the protocol level has changed, it's just, for me at least, it's just another buying opportunity. All right, Forrest, on top of $300 million in liquidations, we saw $1 billion in open interest wiped out in the 24 hours. Where is Bitcoin at now? How has it recovered? And is like what we saw yesterday when it dropped all the way down to, I think, was it 27.5 or 27.2 or 7? What was the exact number?
Yeah. Excuse me. I'm not even tired. I don't know why I yawned. Let's go to my screen here. I'm really not even tired. Okay, so let's pull up Bitcoin on a shorter term, on a different chart, so we can go over the shorter term levels. Actually, we can just zoom in on this one. That's fine. Because I did pull up the gold correlation, because we talked about potentially going over that as well as some other interest. Yeah. So let's throw on our margin pressure levels and note that, to a certain degree, guys, when you have something really, really unpredictable coming in, such as the news that broke yesterday, TA is only going to do you so much good. Yeah, it's going to find the support and resistance levels, but you see this huge red candle here. It's just like TA, we had literally broken through the resistance, and we were looking to make some support on top of it, right? And then we were looking for continuation on upwards. The market looked really, really good, and then it spiked down. It fell, held this kind of structural support down here. Actually change the color of that so it's a little bit easier to see. But now we're just pressing up against that same resistance again. And the fact that we fired right back up to it in the following, the subsequent 24 hours is showing me that this wants to run through. It ran through it once. It ran it all the way back down to the support. That it got rejected from that support, and the market says they want to take this higher. They were very happy to buy Bitcoin at $27,000 once they found out that news was off or was no longer the case. So, look, the unfortunate thing here is that we now have gotten a glimpse or a taste of what is likely to happen if the government starts selling off Bitcoin or if there's a large Mt. Gox distribution. However, as of right now, if we break through this level, this prior support and resistance level at 29.3, that's a strong showing from Bitcoin, right? And we kind of talked about this potential scenario of like, hey, look, there's your left shoulder, there's your head, and this is potentially your right shoulder, right? There's your head and shoulders to press up through this resistance and go up to a new high or a new local high, which would be, 30, 32, 33, could be as high as, 37, 38, 39. So yeah, overall, Bitcoin looking strong here. If we fail at this resistance, right, look for it to round trip back down to this support level, right? And there's kind of our midpoint right there at around 28. So and then do we want to cover ETH or RSI or
let me ask you this question first. So Bitcoin rebounding at that when it had that massive candle down to that 27.5 level, and it pretty much bounced right off. I mean, that thing fell pretty fast. Is that a net positive to you? Like, if Bitcoin does get down to 20, that same level again, does it give you more confidence to either put in a swing trade at that level or to accumulate at that level? Does that mean there's a crap load of buy orders at that level? Well, what does that say for us to see that massive candle and the market freaking out, and for it to just bounce immediately off that one level? Well, what does that say to people who are looking to invest?
Yeah, it just means that there's a lot of demand down here. There's a lot of people chomping at the bit to buy Bitcoin down there. And let me also drag these margin pressure levels over, because I think there may be another one in that region. No, it's maybe the short levels. It's also the level where, and I want to get the actual specific level, because I do believe it's a short margin pressure level. Maybe the 7x. It's not super relevant. So regardless, structurally, this is where historically we've started to see just a ton of demand. It means that Bitcoin at 27.3, it didn't spend a lot of time down there. As soon as it dipped back down, buyers came right in. They came right back in to push it right back up. So there's a lot of confidence and a lot of support there. And the more times you test and hold that support, the stronger chance that the market's going to go and explore elsewhere towards the top of the range. And that's exactly what it's doing right now. It's exploring here the top of the range, trying to break through this resistance. Look, if it can't break through this resistance and shorts start piling in, right, we'll just probably start ranging, right? Because we've got strong support here, we've got strong resistance here, and we either are ranging, or we're very likely to break through and take out some of these highs here. This is a key level to break through. If we break through and hold support, and I know that's getting super messy, but we break through and hold support, it's very likely that we go up. It's a strong bit of confidence. But yeah, to your point, a lot of demand down here. That is bullish.
Good. Now, you mentioned the gold correlation, right? We have this article from Bitcoinist. Bitcoin emerges as safe haven asset with correlation to gold at 2-year high. So they're talking about, providing investors with a safe haven in the face of ongoing banking crisis and rising interest rates. Does the chart say the same thing, or what's your take on this whole Bitcoin gold thing? Are we finally seeing a narrative shift that, hey, Bitcoin is digital gold, it is a store of value, it is a hedge against inflation?
Yeah, so down here we just have the correlation coefficient for Bitcoin versus gold. So yeah, we're seeing rising correlation. Obviously, this is going to change a little bit depending on what time frame you have. So we could throw this on the weekly, and we could see that we're at a 0.86 correlation with Bitcoin and gold. Obviously with FTX, this was the FTX collapse down here. We decorrelated from everything, right? Because it crashed, Bitcoin crashed so hard and suddenly. But off of these lows, and so far this year in 2023, two top performing assets. Yes, the S&P 500 has rebounded to some degree as well, and you've had some individually really solid performers out of so far this year out of the stock market. But you've also got Bitcoin and gold really, really firing up off of the lows here and showing strong correlation. Whereas if we were to run this correlation coefficient on the S&P 500, there's been quite a few days where yesterday was one of them, for the first part of the day, at least before Bitcoin had this kind of mishap, where the S&P 500 was down and Bitcoin has performed extraordinarily well, right? We saw it out of the SVB situation, Silicon Valley Bank. Bitcoin just completely decorrelated with the stock market, and it looked like people were bidding Bitcoin as a hedge against banking collapse.
Do you feel comfortable holding Bitcoin as a store of value, like digital gold?
Me personally, I'm not a Bitcoin person, and that's just it goes. I've kind of talked about this before. I'm an Ethereum person, so I feel more comfortable holding Ethereum as a store of value just because of the deflation and the lack of overhead in terms of energy costs to run the network. That translates into sell pressure on Bitcoin. So I think from a tech standpoint, you having a decentralized, pre-programmed, predetermined supply is an emission schedule is very, very powerful. And for me personally, looking at Ethereum versus Bitcoin, I just expect ETH to outperform Bitcoin over a long period of time over the next 2 to 3 years. So I shift more towards ETH. I understand why people would prefer Bitcoin. There's a strong argument to be made for Bitcoin, as Bitcoin may be viewed by the broader markets. And particularly, potentially institutions coming in to use Bitcoin. But also Bitcoin does have that programmed volatility. So if I'm not a big fan of just the hodl Bitcoin no matter what, because it's programmed to go up and then programmed to crash and programmed to go up and programmed to crash. And it's really, really hard to argue otherwise when you look at the chart of this is exactly the halvings push it up and then it sees this large drawdown. The halvings push it up. Miners get overextended and over leveraged. They have to shut off, and you get Bitcoin miner capitulation. Same thing, rinse and repeat, rinse and repeat. So if you're going to use Bitcoin as your store of value, I would argue that you want to play, maybe not with 100% binary buy and sell orders, but in a bull market you certainly want to be trimming and putting some money away from your Bitcoin position, and in the bear market you want to be adding, right? And obviously Ethereum is subject to those same flows in that same market cycle because Bitcoin dominates and is predictive for the altcoin market. However, it doesn't have that programmed volatility. It just has pretty steady deflation at this point, which is a really new development in the crypto space. So no hate to anybody who's using Bitcoin. Just if you personally ask me, I'm going with ETH.
Yeah, and I think it's important to be able to share opposing views, because I'm sure some people don't agree with what you're saying, but the least we can do, and we don't want to be like our politician friends who can't even have a conversation with each other. Now you mentioned ETH. I want to go to ETH. ETH is sitting at $1,906, up pretty much nothing over the last hour. It's been pretty flat, down 2% over the last 24 hours. Top 10, we have BNB sitting at $333. XRP. Okay, so here's an XRP, not really funny because it's kind of messed up, but it's sitting at 46 cents. But we had this happen. XRP experiences a flash crash to pretty much zero on BitTrue, liquidating long positions. In an unexpected move, the price of XRP crashed to whatever that number is. After experiencing a drastic decline on BitTrue, this dramatic event resulted in the liquidation of most XRP long positions. Now, I wouldn't understand who the hell wouldn't be liquidated long if it went to pretty much zero on the platform. And this is what that wick looked like. Jesus Christ. And so you might be wondering, well, did those people get their money back? And BitTrue, they did come out with a tweet telling them what happened. There was a technical glitch which led to certain orders for XRP USDT trading pair being placed with incorrect prices and quantities. This is what they're doing to make up for it. All positions made between that period of time will be reversed, and the margin account will be returned to their accounts. For users who have been liquidated, all losses will be nullified and their margin amount will be refunded to their accounts. Settlement of XRP will be marked at 46.9 cents. We deeply apologize. A lot of people are saying this was on purpose. I just don't understand if this was on purpose, why they would, bring anyone money back. Do you know anything about this, Forrest? Or does this happen often? Because I'm pretty sure you've been in the space a little longer than I have. And obviously you actively trade more than I.
This used to happen all the time. This used to be a very frequent occurrence. And even going into 2019 and 2020, it was a very frequent occurrence on Kraken of all exchanges. But it used to be a frequent occurrence on a lot of exchanges. And it's a byproduct in many cases. And it can come down to manipulation to some degree, because you could just put in a lot of buy orders down there and market sell if you detect that the order book is really, really thin, and then be able to just pick up people's liquidations all the way down. However, what you used to actually be able to set orders, limit orders in on some exchanges, especially on some thinner order books and on altcoins, 20, 30, 40, 50% below the actual price at any given time. And you could just set these bottom feeder orders, and sometimes they would get filled, because what would happen is somebody would fat finger and actually market sell into thin liquidity. So normally if you're trying to sell $100,000 worth of crypto, you're going to set limit orders. You're going to you're going to make market sells a little bit at a time, because if there's only $100,000 worth of liquidity, or that price goes down to zero, then you're not gonna get, the slippage is gonna be so high that you're not gonna get $100,000 out. You're gonna get like $25,000 out, and you're gonna end up selling all your altcoins to orders that are down there at like $1 or $2, or like very, very, very low. So in this case, like 0.0001 for XRP. So I don't know exactly what caused this. I don't know. It's probably not a glitch. I bet it was just really thin order book liquidity, or somebody fat fingering a market sell, or some sort of manipulation to try to pick up XRP at a really low price. I don't know what it was in particular here, but this used to be very, very common.
Thanks for sharing that. Like I said, you're more active. You've been in the space longer than I have, and you're more active in the trading, and so you would know more than me. But I just wasn't sure if this happens all the time. Obviously, it's good that that people are getting their money back that got liquidated, because that would be absolutely terrible.
All right, guys, I just want to take a quick intermission to say hello to the chat that have been asking for a hola, whatever. So,
you're going to drop holas today, right?
I'm going to drop some hola, yeah.
All right.
So I'm going to drop some hola in my own way, though, okay? I'm going to make you an offer you can refuse. So if you drop an hola on the chat, I will call your name. Okay, just going to say hi to the first one I see now. So Jimmy, I've got a GF, Brooks, and we have a Brock Yoshi, Rusty Boat, Brian. We have a Kick. And then Flat Smack. We have Colin and the BG, Rusty Boat, and Dudu.
Frosted Flakes.
Lazarus, Gainslord, and Knoxville, TJ, and Brock Yoshi. And I'll stop right there. Hola!
Hola!
That's it.
Well, you have to say it in Italian. Hola.
In Italian, ciao.
Ciao, yeah.
Ciao.
Well, no, we don't want him to leave. We want him to stay.
But ciao means welcome, too.
I know.
You should know by now.
I know. I don't know anything by now. Forrest, I woke up today and I chose violence, because I want to ask you. Got the crypto bubbles pulled up here. Hex is down 5.5%. Will you share your thoughts on Hex with us? Are you an investor? Are you an investor in Hex?
No. Look, Hex is... There's nothing inherently dubious or evil about it. I mean, it's code that's programmed to shoot out emissions, but I don't think it's a good investment whatsoever. Maybe in the next bull market it runs a little bit, but it's got a high inflation, and it's like any investment. It requires more, it requires more people to keep dumping money into it, and then you're locking your money up for a long period of time. Right. And it's got what I would say to be strong Ponzi-nomics, like tokenomics, but it's kind of built to really prevent people from selling and encourage people to buy, which can be good in a bull market. But what you'll usually find is that it has like these insane runs up and like large crashes down. No, because in order for it to go up in price, it's going to require a lot of people to buy it, just like any investment, right? Any investment, you got to have other people. I don't think the value proposition of it is high enough to attract a large amount of liquidity and a large amount of buyers. Maybe in the future bull market, we will see buyers come in and speculate on it again, and maybe it'll go up in price. But I don't think there's anything super unique or attractive about it as far as its utility goes. I think it's just more kind of like a Ponzi coin. And I'd advise caution.
I can't not agree with everything you said. A couple other ones, big ones in the red. We have FTT. How the hell is this still in the top 100?
They're launching a 2.0. I think, aren't they reopening?
Yeah, that's the rumor, and that's they've gotten $250 million. I don't think they gotten the money yet, but Tribe Capital, they're trying to raise that money, and they're saying that they got people who want to dump that money in. Ajax is down 4.8%. Zilliqa, we talked about this yesterday, that's drawn down 5.5%. A couple of ones that are in the green: Multiverse X, Injective Protocol, Woo Network, which I know nothing about, and XRD. And no, I won't say the same thing I've said for a whole week about XRD and how it's blah, 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 but it's a little interesting to keep an eye on that. All right, Forrest, let's move on to some of the biggest news, and we'll come back to the chart here. We'll probably chart some Polygon and some Crow token because we got some news on that. But first, let's start with some macro. GDP numbers came out, and well, although an increase of 1.1% might seem good, the economy is actually contracting because the estimate was 2%. And so gross domestic product rose at 1.1% annualized in the first quarter of this year, below the 2% estimate. Slumping inventories and general decline in private investment held back early year gains. Now, if you're not familiar, how do they come up with this number, the GDP number? You take government spending, add that to consumer spending, add that to capital investment, and add that to net imports or net exports. So exports minus imports, that's the net, and that's the number you get for the GDP. And so slumping inventories and general decline in private investment. And we know that stems from the banking sector, right? Banks are running out of liquidity. People are pulling money out. Well, people are pulling money out. They don't have money to lend to people. They don't have money to lend to people. People can't get access to capital for investment. Inflation was higher than expected in the quarter, with the PCE price index rising 4.2% against the 3.7% estimate. Now, Forrest, now we finally have the Fed vocal about, mild recession. Mild recession. I know, I think we've been in a recession. I'm pretty sure you share the same sentiment. If you don't, please correct me if I'm wrong. And so I guess my question to you is, how much worse do you see this getting, and how does that affect the crypto market? And maybe share some tips on maybe what you would do or what you're doing personally, prepare for a big recession, or any advice you can give the people who are maybe scared.
Yeah. Okay. So I think it's unwise to try to predict exactly how bad this is going to get, and rather prepare for potential scenarios. Meaning it's impossible to know exactly how bad it's going to get. There's a lot of economists that think it's going to be, worse than the 1929 stock market crash. There's a lot of economists that actually think that because of the amount of money that we actually printed, and the potential de-dollarization and weakness of the dollar, it's a unique circumstance, and you could actually see equities or even commodities, or different asset classes, maybe Bitcoin, right? We've seen Bitcoin act as a potential hedge against the collapse of banks. Certain asset classes could perform better than expected, despite the fact that the market is, the rates have been hiked and things are more expensive and things are GDP and growth is slowing down. So rather than try to exactly figure out how bad this is going to get, and try to predict what asset classes are going to potentially be immune to that, I think it's better to take on a stance of diversification. So diversification is a risk mitigation strategy. And I've been a fan I've been a proponent of diversification for probably the last 6 to 8 months now. And the reason being is the markets are super volatile, and it's difficult to pin down exactly what's going to happen next. and it's very difficult to go back and look at historical data and find a scenario that has been similar to this one. It's actually very different, and all the while you've got many different changes happening in terms of growth and technology that maybe offsets some sort of decline in other areas of the economy. And I know I'm kind of talking in circles here, and it's because it's an extraordinarily confusing time. So I've been a big fan of hedging against, the rising energy prices with some positions in oil and natural gas, and I've also been hedged in gold and precious metals. I think that's probably a good idea as well. I think ideally you don't want to be holding a ridiculous amount of cash, but we've seen with the drawdowns thus far, having stable coins to deploy into distressed assets has been incredibly important. So as far as preparation goes, I've been a big fan of diversification. I can't stress it enough. When you sit and look at really respected analysts and economists right now, and even traders, what you'll see is there's a lot of confusion going on and a lot of disagreement. I follow, multiple economists and investment analysts, and I'm one myself. But I follow a lot of people that I respect and have had great track records in the space. And I'll look at what one is saying, and it'll be the total opposite of what the other is saying. So for that reason, I think we're in a position where there's a lot of confusion, a lot of polarity in the market, and the best way to hedge against that, as boring as it is and unfortunate as it is diversification. And diversification has not been a winning strategy really for the last 10 to 15 years. The strategy that has won for the last 15 to 20 years up until the end of 2021 was a risk-on strategy for the most part. Yeah, there was some pullbacks, but ever since 2007 and 2008, you've done extraordinarily well in real estate, the tech sector, and crypto. Those are like the three top performing asset classes. Now things are shifting and things are changing, and it's uncertain what those top performing asset classes are going to be. And I would expect a lot of volatility across a lot of them. I do see crypto as a very high growth sector. And that's why I'm positioned in it. I also feel like I have an edge in crypto because I spend all day in crypto and I look for opportunities, and I pay very close attention to the crypto markets in general. But for most people, a diversification or a strategy of diversification into multiple asset classes is probably the best bet, as boring as it is.
That's some sound advice, man. And before I give my take on this, like the video. Got 205 of you watching, 102 likes. Let's get up to 150 so we can open the mystery box. See what Jimmy has to give everyone in the community. All right, here's what I think about recession. I think it's going to be an absolutely net positive for not only Bitcoin, but for all of crypto. Because here's what I think, a few things are going to happen. I think people are going to look at recession happens, stock market's down. People might not feel safe holding money in the dollar because of what we see happening with de-dollarization. And so you're going to have these hedge funds and these funds that their sole job is to make money, take a look at other asset classes. And I think Bitcoin is going to come to the forefront of that. So there's the Bitcoin. My second argument is when a recession happens, companies start looking at their financials. All right, where can we cut back? Where can we save money? And we know blockchain and AI can save companies money. So I think we're going to see an acceleration of a shift from traditional business moving their businesses onto blockchain. We're starting to see it slowly, but I think a recession is going to be a shock to the market, to the businesses. Say, all right, we can save a ton of money on this. We can save a ton of money on fees. We can save a ton. We can be more streamlined. Blockchain is going to help solve a lot of problems, save us a lot of money, save us a lot of time and resources, and that adoption is going to speed up. And as that adoption speeds up, prices of crypto will go up because, hey, if a big company decides, hey, we're moving some part of our business onto the Ethereum blockchain, we want to have some sort of say in the network, we're going to buy and stake some ETH. We're launching on Cardano, same thing. We're launching on Solana, same thing. So I think that's what's going to happen. And so a lot of people look at a recession, and I could completely be wrong, but I'm actually bullish on what a recession does, because when stuff hits the fan and you're starting at the ground level, right? And people's savings got wiped out. Banks are getting wiped out. people are at the ground. They're at level 0 again. You're like, all right, I got to build this thing back up. How do I build it up in a way that if something like this does happen, if the Federal Reserve, if their monetary policy is not sound and they make the same mistakes again and the government keeps printing money, how can I make sure I shield myself? And they're going to look at stuff like crypto and Bitcoin. And I think that is really what's going to help the space. So I think actually a recession is going to be a net positive for Bitcoin. Maybe not right off the bat because you are going to get some of those sellers. But I'm telling you, we know for a fact crypto and Bitcoin are going to bounce back first. And I say that because look at the past and also just everything I just said. And so that's kind of my 2 cents on that. Let's move on to some news about Cronos. Cronos rallies after revealing partnership with Amazon Web Services. The native token of Crypto.com is soaring after unveiling a new partnership with Amazon. Amazon says that it's partnering up with Cronos to support Web3 startups, including DeFi and infrastructure. Amazon Web Services is where this is a quote from them. Amazon Web Services is working with Cronos Lab to support the Web3 startup scale and grow through the Cronos Accelerator program to develop DeFi, GameFi, SocialFi, and infrastructure applications. Amazon will be helping startups through the Cronos Accelerator program. Program provides an immediate $30,000 stipend, access to an investing network that features key names within the industry, and up to a $300,000 follow-up investment from Cronos Labs' $100 million ecosystem fund. Other companies that have used Cronos Accelerator program in the past include gaming giant Ubisoft. Now, Forrest, obviously, we can sit here and say, we both agree this is bullish, but does this change your investment strategy? Do you want to add some Cronos to your bag? What are your thoughts on this partnership here?
No, not at all. And that's not any dig particularly on Cronos. It's more so that it's like if you add a cryptocurrency to your portfolio, every time there's some bullish news about one cryptocurrency or another, it's like this.
You run out of money.
You're buying into the pumps and you're buying into the news, which is usually not a great strategy. But then you get yourself really, really watered down. No, CRO was early on in the bull market, last bull market, very volatile, and it was Crypto.com was like if you staked CRO, you got like certain benefits, but then they changed those benefits at at Crypto.com, and that tanked the price. So they like pulled the rug on a lot of their stakers and investors, and it was just not shady, but just not a really. You were at the whims. You were subject to the whims of what they were doing with their like rewards program.
Well, Forrest, let me push back a little on that because I actually thought that was a good move because when stuff started falling, right, that happened after the whole Terra Luna thing and the Voyager thing, and this is my take on it. And my take is if they wouldn't have done that and they would have kept it at 8, 9, 10%, to me, that would have been a red flag. To me, that would have been like, all right, they're just trying to get more people to come in. We saw other exchanges, 0 fees on trading. They're incentivizing people to bring more money into their ecosystem, and hence they're not here anymore. And so I actually saw that as a positive. When stuff does hit the fan, you adjust. And to me, that was actually a good thing. I saw that, okay, they're fiscally responsible. And yeah, it sucks. You go from 8% to 3% or 4% or whatever the case may be. But that was just a reaction to what was going on in the markets. And some argue, and I can argue as well, that they were looking forward and anticipating what could possibly happen. We don't want to put ourselves and our customers in a bad situation. So that's kind of my pushback on that. But go ahead and continue.
Yeah, 100%. So I'm talking about like way even before that. I'm talking about looking at the chart here. I think it was like in October of 2020, they went from 19 cents all the way down to 5 cents. And that was like way before Celsius and BlockFi and Terra Luna. This was like because they had like, okay, they said like if you own 50,000 CRO tokens, you get these benefits, you get these perks, so like these, you know, trading structures. But then they like kind of rug pulled those, and they changed those to where like then they required 150,000 CRO tokens, or like they increased the amount that you had to own, and like decreased the perks and benefits, and it caused a really sharp 70% correction, which it ended up recovering from, and you know has done well. But that's what I was referring to as far as like the yield on like the earn program, or you know their version of, you know, lending program. Yeah, totally agree with you on that stuff. This was like way this was back in like 2020 or potentially even 2019. But yeah, 100% agree. But no, as far as CRO goes, it's kind of like I view it as like another Binance Smart Chain, like another Binance token. It's like kind of that hybrid model, which has worked really well for Binance. I just personally feel a little bit less confident in crypto.com than I do Binance in terms of, you know, security and transparency. And growth potential, but that's just that's not based on any one piece of information. That's just my general, I guess, vibe for lack of a better word.
Yeah, you know, crypto.com went through some FUD when FTX went down, and the whole, you know, CZ came out and was like, oh, proof of reserves, and there were people caught wind and on chain that these exchanges were sending large amounts of money back and forth to each other and taking a snapshot of, hey, we have these in reserves. Crypto.com was in that fray of what was going on. And they're like, and they were asked, why did you send this amount of money? They said they fat fingered it. So, but I'm going to be intrigued to see what Cronos comes out to, what it looks like in the end. Could this be another Binance giant? Could Crow get into the top 10? Let us know what you guys think in the chat. Do you think Crow, if they continue at the pace they're going and continue building, can they be a top 10 token? Put a 1 for yes, put a 2 for no. Can Crow be a top 10 token? 1 yes, 2 no. Some other Cronos, well, crypto.com news. Tech giant Samsung has sung the praises of crypto.com as they've inked a partnership with crypto.com. Tech giant Samsung has inked a partnership with leading crypto platform crypto.com. A move aimed at driving global crypto adoption and enhancing the smartphone experience for Web3 communities. In a first for any crypto app, the Crypto.com app's most recent update is specifically optimized for Samsung Galaxy Z Fold devices, including the latest Galaxy Z Fold 4. Real quick for us, a little off topic. Are you a fan of the Fold phones?
Personally not, but I don't know. I've never really like used one, to be honest. Yeah. I just know that like for me, that little kind of like inconsistency in the screen in the middle would really bother me. Like I'm the kind of person, like if I have a scratch on my screen, like I got to go take it in to get it fixed because it really bothers me.
Not me. No. I'm the guy. I'm like, all right, unless it completely stops working, I don't have time. It's just me being lazy. A couple things here to highlight. Samsung has a history of involvement in the crypto space dating back to its introduction of a crypto wallet in the Galaxy S10 phone in 2019, so 4 years ago. Samsung Blockchain Wallet added support for a slew of popular cryptos such as Bitcoin and ETH, as well as integrated with dApps. In addition, Samsung's subsidiary, SDS, has been actively involved in the development of blockchain technology. Now, Forrest, there's a lot of talk about Web3. A lot of these companies are hopping on. If someone wants exposure to Web3, I'm sitting here and I'm like, I think Web3 is going to be massive. What's the best way I can get some sort of monetary exposure to Web3? What advice would you give, or what are some areas or maybe crypto projects to look at if someone's goal is that?
Yeah. It depends on like what niche they're interested in. If they're like really interested in blockchain gaming, that's like a niche that they could dive into, but it's just for general Web3 exposure. A big fan of, and I actually keep a short list, Ethereum, Matic, QNT, Chainlink, Avalanche, Solana. And if you're bullish for some reason on decentralized storage, I'm a really big fan of Arweave. If you like DeFi, I'm a big fan of Phantom. And if you like coins that perform well in a bull market and just completely rip and outperform everything else in a frothy bull market, Cardano is for you.
Hold up.
But yeah, I'm happy to dive into any of those.
Say that one more time for us. I didn't hear you.
Cardano is for you.
If you like coins that perform really, really well in a bull market, Cardano's for you.
But is it, I mean, would you tie it to like a Web3? I mean, you can argue anything's Web3, right? But
yeah, any layer one is going to be like, Web3 based, for sure.
So let me ask you this, and this is just your personal opinion, right? And anyone can do whatever the hell they want with their portfolio. But is it better to just like pick 10 of them that are possible and just $100 at 10 of them, or pick 3 of them or 4 of them and put more money into those 4, but run the risk of maybe you didn't pick a winner, or maybe you just need one of those winners? What, like, personally, what's your strategy there if you want exposure to an entire sector of the crypto market?
Yeah, look, if you're just looking for a layer one exposure, I think your best bet is to just go with 2 or 3. I think you could do really well with Ethereum, Solana, Cardano. Ethereum, if you want to go a little further down the risk curve, Ethereum, Algorand, Cardano, or Ethereum, Solana, AVAX, those kind of top 5 layer ones, excluding Binance Smart Chain. I personally am not super bullish on Binance Smart Chain, and even though it's performed extraordinarily well, but these really new innovative layer ones, I think are solid bets. But I would go 3 or 4. I don't think you need 10 of them. I really don't. I think you spread yourself too thin, and it becomes very difficult to track 10 tokens and 10 charts and feel confident about when to take profits and when to add more to your positions.
Okay. All right. That was great, man. That was, it's just interesting for me. If I'm not sure, and I don't have time to do the research, I guess just kind of throw stuff at the wall. I mean, it's not very good strategy here, but for me, if you got time to do the research and you watch shows like Sin City Crypto and Sistine Research, you'll kind of have an idea of who's moving in the space, what things they're making, and you won't have to just throw darts at the wall. You can just pick 2 or 3 of them, and instead of spreading yourself too thin, you now have a better exposure to better projects. Now, speaking of better projects, we have some Polygon news, as Google Cloud is now going to support Polygon to help grow their ecosystem. Tell me that even though your portfolio is down 70%, when you see news like this almost every single day, how could you not be bullish on the space long term? How could you not? How could you not? Now, Google's Cloud's blockchain node engine, which is a service for fully managed node hosting for Web3, will support Polygon as part of a multi-year strategic alliance announced by Google Cloud and Polygon on Thursday. The move will simplify the deployment and management of Polygon nodes for developers and aims to increase the adoption of the Polygon ecosystem. The blockchain node engine already supports Ethereum, and it is also working to integrate Solana in a move that was first announced last November. This is a quote from Brandon Farmer, co-founder of Polygon, said, "Google Cloud Infrastructure will help to scale the technology more quickly in order to ensure that transactions remain fast and fees remain low as demand increases. In addition, it will make it easier and faster for developers to deploy on Polygon's proof-of-stake network and Polygon supernets, all while providing access to funding for Web3 startups." Forrest, how bullish are you on this news? How bullish are you on Polygon? Share your thoughts.
So I personally don't think that this is like groundbreaking, insane news that's gonna like throw Matic through. What's up?
I was like, what?
Yeah, I don't think it's gonna like cause Polygon to go to $2 tomorrow. But like, when you have a series of these announcements and these integrations and these partnerships over a period of a year, and it's just every week constantly improving and constantly growing and constantly making their product better with existing partnerships and institutions, then it all adds up to be extraordinarily bullish, not only for Polygon, but just for the space in general. The thesis with Polygon for me is not necessarily even on their tech side. It's more so on their ability to onboard Web 2 companies and partner with Web 2 companies to onboard users. So no, this is great. I think this is a really solid step for Polygon. It's a very, very positive thing for crypto in general.
You guys already know my stance on Polygon. I'm hyper bullish on Polygon, one of my favorite tokens. Rob, he was bullish on Polygon, and now he's not. He said it's already had its run. I think Polygon could get to $7 to $10 next bull market. Easy. Number one, layer two on Ethereum. They're their own layer one. All these partnerships, these traditional companies coming in, tokenomics are good. The team is good. They got longevity on their side. They continue to build through the bear market. That's the important thing. Think about how many projects we haven't heard of anything from. Have you heard any Polkadot news in the last 3-4 months? I'm not saying Polkadot's going under. Up until now, have you heard any news on Cronos? Have you heard it? Like, we consistently talk about Polygon Matic almost every week. I can argue multiple times a week. And so it's like a snowball, right? It starts small and you keep rolling in the snow and it gets bigger and bigger and bigger. And eventually, once it catches that hill, it's game over. Bam, Polygon $10. You heard it here first. All right, speaking of Web3 and Google is adding features to cloud offerings on Web3. Google Cloud is now offering a special initiative for Web3 startups that leverages collaborations and partnerships with some of the biggest companies in crypto. Projects who become part of the program will receive unique Web3 benefits, including a private Discord channel with Google Cloud Web3 product and engineering teams, Web3 training courses, and grants from Google Cloud's foundation partners, Aptos, Celo, Flow, Hedera, and Solana, and Near. Forrest, what are your thoughts on this? Like, I feel like Google is, we're in a recession and they're letting people go, but they're throwing money and resources at Web3. We talk about what's going to be the big narrative that pushes the next bull market. Is it DeFi? Is it gaming? Is it NFTs? Is it Web3?
Yeah, I mean, I think Web3 encapsulates all of those things that you just mentioned. Web3 is kind of, I view it as including all of those things. But yeah, no, I mean, look, I think Google's obviously on board. You have to adapt or die in this space, and I think you'll see other large companies, Web2 companies and brands come on board as well. I mean, obviously Google is coming in more on the cloud infrastructure side of things. You've got Amazon, AWS coming in on the infrastructure side of things. What I'm most excited about is Apple potentially coming in on the product side of things. I think that's more and more likely to happen as time goes on. It's just we haven't quite seen it yet. But Google and Amazon coming into the space in a big way already. I think we're only going to see more large companies and brands come in.
You mentioned you're excited about Apple. Some people take the opposite take. They say Apple's just going to come in, right? The ethos of crypto is open source. So someone stumbles across the technology or whatever the case may be, and it's open source. You can go to GitHub, you can pull the code and the source, and you can build on top of it or use it. A lot of people are saying if we're getting these large companies like Apple or Google or Amazon, they're going to just build their own network and just not share anything with anyone. And so, I mean, what are your thoughts on that? What do you say to that? Does that worry you at all?
Look, I mean, they've got so much distribution that I think it would still, if they move into the Web3 space, I think it'd still be a net positive. Like even if it's Apple building their own, look, maybe they don't have the expertise to building a blockchain's hard, right? We see all of the problems that Solana has had, all the problems that the Ethereum has had, all the problems that all these cryptocurrencies and projects have had. It's not easy to build. It's also very, very expensive. You've got, a couple you've got Aptos, you've got Sui, a couple of these like Silicon Valley projects coming out. Look, Apple could probably build their own, and maybe they will. Or maybe they'll go to Solana. Maybe they'll go to Aptos. Maybe they'll go to Sui. But if they do build their own, just the simple functionality that it would have you would very likely from your iPhone and from your computer be able to send and pay with USDC and have self custody, right? You could probably custody a lot of your stuff in a Ledger device and then move that onto your phone wallet, your Apple, whatever network, and then, bank yourself that way. I believe there was some news about Apple, potentially creating their own bank. And I think they're going to, move into payments. And look, there's still probably going to be interoperability and ways to self-bank yourself, even if Apple moves into the space and creates their own chain. You'll just probably have to move from your Ledger, the Ethereum chain or whatever, Bitcoin, move it onto your Apple device. But that's still better than having your bank account shut down or having to keep all of your money in a bank that goes under, like Silicon Valley Bank or Silvergate. So, I think there's still probably going to be ways, and it'll probably still be a net positive in the long run.
Awesome, man. Guys, if you like the show, if you like me, if you like Forrest, if you like the fact that Robin's not here and you love Rocco, make sure to hit the like button.
It has to be one or the other.
Rocco, don't let me forget to open up the club, because if I don't,
they won't let. I don't think they're gonna forget this time. If
they're not gonna forget this time.
You pull the rug on the club today.
I will not. You won't get rugged, I promise. Okay, you won't get rugged.
Okay, yeah. There is a mob getting together already.
All right, I want to share another piece of big news, and this is also around Polygon. As Franklin Templeton connects their $270 million fund to the Polygon network. Oh, yay, another big Polygon article. Okay. To those that fade Polygon, I don't know what to tell you. I missed the Olas. Yeah, Harry, you know what? Actually, it's been 3 days. I also missed the Olas. I missed the Olas. But it just, when it gets like 17 in a row, it's too much.
Harry, Ola. Right there.
No, you got to sound weird and sound like you're spazzing out. Anyways, Franklin Templeton, one of the world's largest asset managers with 1.4 trillion with a T dollars under management, said Wednesday that its on-chain U.S. government monetary fund is now supported on the Polygon network, allowing investors access into the Ethereum blockchain. This is a quote from Roger Baston, head of digital assets at Franklin Templeton. Extending the reach of the fund to Polygon enables the fund to be further compatible with the rest of the digital ecosystem, specifically through an Ethereum-based blockchain. Templeton's NASDAQ-listed mutual fund is the first U.S.-registered fund to use a public blockchain to process transactions and record share ownership, and has over $270 million under management. Forrest, what are your thoughts on this?
Yeah, I mean, this is the investment thesis on Polygon. They just crush it. There's no other chain that's just going out and doing the biz dev work to onboard use cases like this other than Polygon. It's just like, name another one. Yeah, there's other, there's Arbitrum is crushing it on DeFi, right? Solana's crushing it with NFTs, right? You've got all of these, AVAX is crushing it with enterprise subnets and use cases. But as far as actually going out and creating these onboarding processes and actually onboarding these large players into the space and onto their chain, like, nobody else is doing that in the way that Polygon is, and they're going to have $270 million. That's insane. That's a lot of money. $270 million in TVL. I don't know exactly. I haven't done the research to know whether or not all of that $270 million of that is hosted on chain or not. But if it is, that's $270 million in TVL that's added to a block. 270. There's tons of layer ones that don't have 270 million in TVL in total value locked on the chain.
That's half.
This is
that's more than half of what the second largest DEX on Ethereum has. SushiSwap.
Yeah, I mean, it's. Big win for Polygon, and they've shown a history of being able to go out and do these things. They got JP Morgan to do like a transaction on Polygon or whatever. Like they're just going to continue to probably do this, and it's going to be reflected in the Polygon token price, I would imagine.
You think $7 to $10 is? You think I'm crazy for saying that for next bull run on Polygon?
Not for next bull run. I think that's probably completely fine. That is 7x on its current market cap is like 70 billion. I think it's at a 9 billion market cap, if I'm not mistaken. I'll tell you in a second. Yeah, it's at a 9 point. So call it 10 billion market cap. A 7 to 10x is 100 billion. I mean, look, Binance Smart Chain's at 53 billion right now, and it's a bear market. In a frothy altcoin or a frothy alt season, sure. Do I think it'll go to $7 to $10 and sustain that for for the entire bull market and then the next bear market? Maybe not, but I could absolutely see us going up and tagging $7 to $10 for sure.
Tag it, bag it, send it back to the mug. One Italian guy told me that at a restaurant one time. I thought it was pretty good. All right, let's move on. Fidelity doubles down on metaverse with financial literacy experience. Financial services titan Fidelity is looking to build upon its presence in the metaverse via digital experiences designed to bolster financial education for investors. The company is set to launch Pancake Empire Tower Tycoon on online gaming platform Roblox, as well as what it calls Bloomerama in Decentraland. Decentraland users who visit Fidelity's Bloomerama will navigate a hedge maze to gather saving, spending, and investing tips. Taking quizzes along the way, users can unlock a Power Pedal suit, BB's Boost Pack, BB Shades, and Bloomo Vision. Now, I say that jokingly, but I think it's important. I'll get here in a second. Company, which had more than 10 trillion in assets under administration at the end of 2022, speaking of Fidelity, of course, also filed trademark applications late last year related to a range of metaverse services, and plans for an NFT marketplace were also included. Now, Decentraland, also, JP Morgan launched a virtual lounge in Decentraland a little over a year ago. And bank analysts at Citi said in March of this year that they expect the Web3 economy to reach between $8 and $13 trillion over the next 7 years. So, real quick first, before I get your take on this, I want to just say, I think what they're doing as far as this, because who are the people that need, whether it's investing tips, saving tips, just financial literacy and education, it's the younger generation, right? You're not going to go into a 50, 60-year-old that generate Gen X or a baby boomer and change their ways on how to invest, something they've stuck with and learned from their parents or their financial advisors. But the people you can make an impression on are going to be the millennials, the Gen Zs, the Gen Ys, all the other letters of the alphabet. And so I think this is big in that sense as well. But I want to ask you, metaverse, is Mana in the lead, Decentraland? If you're going all in on the metaverse and a project in the metaverse, is Mana the one? Or like, what are your thoughts on what Mana's doing, and are you bullish on the project?
Yeah, look, for Metaverse, I think your two leaders are Sandbox and Mana, but I think both are probably still really overvalued. I think that's a narrative that got blown way out of proportion. Look at Decentraland. I'll tell you what the valuation of it is in a second, but let's see, fully diluted valuation, $1.2 billion. So they get a $1.2 billion valuation, but they have 8,000 daily active users. An 8,000 daily active user video game is a video game that you've never heard of. In order to bring in revenue, you need to bring in eyeballs, and they just don't have eyeballs. They like, no one's playing the game, no one's logging into Decentraland. 8,000 people are. And I genuinely don't think people want to. I think the metaverse is what we're doing right now, sitting on a live stream in front of a camera. We're not in the same room, but we're still communicating. But I'm a real person here. Why? Like, there's a reason that this live stream is not like animated characters of us, and we're not wearing goggles right now and like sitting in a virtual digital studio. Like, why would you spend so much? Why would you invest all this money into the studio that you're in right now if you could just run the stream out of a virtual studio and get the same type of following and then the same type of engagement and people tuning in and the viewership? I just don't think that the metaverse and like, I just don't see a world where people are going to work in virtual reality. It's like, we already have Zoom. We already have like this really comfortable experience that's really, really smooth. And I just don't see a world where we're going to be like, I don't want to wear goggles. Like, if I was wearing goggles right now, seeing this like virtual room, it just would be weird.
But what if that technology or the hardware gets better?
That's been the argument for the last 5 to 10, I mean, maybe not 10 years, but for the last 5 years, all I've heard is the goggles are going to be so small that it's going to get better. It's going to get better. And they've gotten a little bit smaller, and eventually maybe they will get to a point. But even if they were just, glasses that were like really, really easy to wear and clean, I would just be like, what's the point? Why am I wearing these glasses going into this 3D animated world when I could just be in the real world right now with you? I just personally think the narrative got way, way overblown. I think where people want to spend their time is games. You can sit and play Call of Duty for 6 hours, but you're not going to sit in a metaverse meeting for 6 hours. You might get on a Zoom call, but that's to me, that's the metaverse. So I think these have really overblown valuations. I don't think they're going to be able to get the users that people think they are. And this is coming from somebody. I bought Decentraland when it was 3 cents. I kind of saw the vision. I was like on board. I was like, digital real estate, this is really cool. I thought it was a good investment at the time. Ended up selling it at like 8.5, 9 cents. So missed out on millions and millions of dollars if I had just held it. I was shocked at how big the narrative blew up. I never expected it to be this big of a narrative. I never expected Facebook to completely rebrand around it. The market thinks Facebook has made a huge mistake branding around it, but still assigns Decentraland and Sandbox a pretty high valuation. So that's a really unpopular take in the crypto space, but I just personally just don't think people are going to the average person that goes into the office every day, or my parents aren't going to be wearing goggles, in the metaverse. And even if it does, we'll see it coming a mile away, right? Because you'll see the younger generation adopt it in troves before the older generation does,
100%.
just like cell phones, whereas the younger generation was on cell phones and smartphones 100%. Way before the older people were FaceTiming. It took them a long time. So I still think if this does blow up, you'll still be able to, the adoption curve will be slow enough that you'll still be able to catch the tail end of it, as the older generation gets into it. So
I agree. And I think, we sit here and say, why would we want to be avatars or whatever? But look at all the people on Twitter. How many of those people have their actual names or their actual pictures? It's all anonymous, right? Anonymity is a thing, especially in the younger generation. But what does that mean? Like you said, that generation is it's gonna take years, some argue decades, for the metaverse to be really here, practical. People are actually using it, and I agree with JP Trees and a couple people in here as well. Pep Brett, augmented reality will be bigger than virtual reality. I think that's going to be pretty big. Obviously, I think that's the next in line to come. But all right, Rocco?
I just want to add something else. I recently went to a conference that is all broadcasting. There was this in the Canon section. There was this guy showing this laptop where you put these glasses. It wasn't the Quest. It was actually very light glasses, and you will see exactly what you see now in front of you, but you will see the interaction from the other side. In this case, it was just an animation. But let's say there is a doctor operating, and you are across the other side of the world. You were able to, extending your hands. You enter now his world, and you will be able to point exactly, if there is some issue or something, where to interact, where to cut, where to do some actions. The same can be done, if you play a guitar and I want to teach you how to play, you can put your goggles. Now the other person is playing, and you can say, with your finger pointer, you do the wrong chord, you can adjust.
You're holding it wrong.
Yeah, this guy says they're only available in Japan so far, and
what about?
It costs $20,000.
And that's actually a good point. What about I don't know, car mechanics? If you're
anything, pretty much, you can use it in anything.
I thought I was going to be able to fix my headlights. This is what's going on. All right, here, let me tap into your whatever or whatever. I think it's endless and limitless, the possibilities. I definitely agree with Forrest, though. I think it's going to take a long time. So for me personally, metaverse tokens and metaverse projects are not something I'm looking to FOMO in right now. I think there's better projects, better sectors of the crypto industry that are going to pop off sooner. And so I think that's where we should put our money. Rocco?
What is it? What's going on?
I think it's time.
It's time? What is dreaming?
Well, there's a few things, although when we open up the club, we really do it to celebrate new milestones. And although 220 viewers is not a new milestone, I do want to give some love to our amazing community. They felt like I rugged them a few days ago. I did not, but to you, to our community. And I know you want to see Forrest dance moves. So here we go. Rocco, open up the club there. Yeah, dance. Yeah, me and Forrest are like,
let's go.
Dance. Come on, bro, dance. I'm trying to get my son to dance, but oh man, it was a fun show, man. Forrest, thank you so much. It's always a pleasure to have you on, my friend. You know, you're not just a guest on our show, you're a part of our channel. You're an important part of our channel, and we just appreciate having you on here, man. So thank you for clearing your schedule for us to help us out while Rob is off. Guys, before I let Forrest go, do yourselves a favor, not even him a favor, do yourselves a favor and go follow him on Twitter at 00Forrest. Drops a lot of amazing threads on there, a lot of great information, a lot of TA and charts and price levels to look at. Also, if you're not subscribed to his YouTube channel, at Sistine Research, he's got about 30,000 subscribers. A lot of people say we're underrated. This channel is extremely underrated. Does TA every single night. And also, if you want part of his research papers and kind of what he finds, just as an example, the NFT project, the Mad Lads, he sent that research paper out to his people a week prior. And the money you spend on that service, you would have gained it back 20-fold because you would have minted it at 7 Solana and it's sitting right under 100 Solana right now. And so this man puts a lot of time and effort. He's very knowledgeable. He's been in the space a long time. So I just recommend, just for your own knowledge, go follow him. Go follow Forrest. Also, if you're not already, go follow Sin City Crypto. 4,500 followers on Twitter at Sin City Crypto 1. Also, go follow us on our YouTube if you're not subscribed yet. We're at 8.46 subscribers. 8.46 thousand subscribers, my apologies. So help us out, man. We know we're going to blow up, but help us get there faster. We're bullish on us. We're bullish on you as our community, and we hope you're bullish on us as well. Also, go check out our merch store. Go follow us on all of our other channels. If you want to support our channel, there are some links in the description of this video. Forrest, anything you want to leave us with before we let you?
No, as usual, I appreciate all the kind words. I love coming on here. It's always a pleasure. Looking forward to closing out the week tomorrow. It's been a great week. It's already Thursday. Tomorrow I'll be on again, and just really looking forward to it. It's been amazing.
Yeah, man, we have a lot of fun with you, Forrest. So thank you so much, Forrest. We shall let you go. Well, first we're going to come here. So I mentioned in the beginning, today's Bring Your Kid to Work Day. So this is my my middle son. This is our little blockchain quarter here. You shut your mouth. Do you want to do our finger tornado and get us in there? Come on, man.
No.
Let's do it together.
No.
Do it together?
No.
Okay. All right. Then this is what we do. Ready? When you go to your teacher and say, "Oh, what did you learn from your dad's work?" I learned how to do the finger tornado. Rocco. Friends, family, friends, and family of friends. Thank you guys so much for joining us. It was an absolute pleasure to have you here. We hope you had a great time. We did. We will see you tomorrow. Same place, same time. On behalf of myself, Rocco, Forrest, and the little man here, we love you guys. Until tomorrow. Peace. unmute me, Rocco. That is my son. Pet Brett, that is my kid. I'm pretty sure it's my kid. 100%. I mean, he's got my goofy ass personality. He might not look like me, but he's got my personality and he's got my smarts. Very smart kid. Love you guys. See you tomorrow.